folks, and welcome to this video. Today we're going to talk about the configuration options for the Pipnotic supply and demand software. Okay, so the software is installed like any other indicator. Before you install it, I recommend that you do this. You go to your terminal and you go up to Tools, you go to Options, and then you go to the Expert Advisors tab, and then you check this Allow DLL Imports. And once you do this, this ensures that every time you drag an expert advisor or an indicator onto the chart, that it's allowing that piece of software to import native Windows DLLs, which the Pipnotic supply and demand software, buy and sell zones, all of it requires. Otherwise you're going to get a pop-up message that said you have to remember to do that, and that's a real pain, and that confuses quite a few people, so just keep that in mind. Okay, so then you take the software and you drag it onto the chart. So you can do that by clicking on this button here. This is the navigator, and in the navigator you find where the file is located, and this is typically in, let me show you. If you want to know where you should put the file, you go to your terminal, File, Open Data Folder. Let me move that over here, and here you go to MQL4. Then you have a bunch of folders. Expert Advisors go in the Experts directory, Indicators go in the Indicators directory. Okay, so just remember to do that, to put the right file in the right folder. A lot of people have mistakenly put an indicator in the Expert Advisors directory or an Expert Advisor in the Indicators directory, and then the software won't work. Okay, because there are very special functions that are used to initialize a software based on where they are located. So just get that right. That's super important. Okay, so for the indicator, which is this piece of software, double click here and just paste it anywhere in here. Okay, then you can close this and you can right click on here and you can press refresh, and that'll refresh this tree. This is called the tree, and these are the branches and these are the leaves, and then you can navigate to where you have it, and I've got it right here. I'm just using the development version, and then I take the dev version and I drag it onto the chart like so. Okay, and this is going to bring up a bunch of the options. Note that if we go to the common tabs, Allow DLL Imports is already checked, and that's because we did it up here using the tools menu in the global settings. Just a lot faster and ensures that you don't make that mistake over and over again. Okay, so going to the inputs, we have a few different values. We have the keys. We have the product key. This is the one that changes every month. On the first day of every month at midnight, or 1 minute past midnight on the first, the product key will change. Okay, and I'm doing this because I had a bunch of trouble with a prop trading firm in the US who was distributing the software illegally, and so I wanted to try and thwart that, so I've had to beef up this. Okay, so I did that with monthly keys, and I combined that with the private key here. Okay, so when you sign up with Pipnotic, you'll get an email, and in that email, about halfway down, there will be your private key. You take that value and you paste it in here, as well as the product key, which you can find in your downloads, and then you're good to go. Okay. We have another section called Performance, and Performance simply tells the software how often to execute the algorithm. And because the algorithm is executing an unimaginable amount of code, it's super important. At least I want it to execute this code as little as possible, and so I've limited it to once every 3 seconds. Okay, so if you think if your platform is bogging down a little bit, you can turn this to 5 seconds or 10 seconds. Okay, but that means if it is at, let's say, 5 seconds, and you drag the indicator onto the chart for the first time, there will be a 5-second delay before you can see it. And so some of you may drag it onto the chart and it's not showing. You think it's not working. Well, it does work. You just have to wait for this 5-second execution period to pass. Once it passes, then you will notice that it'll flash onto the screen, and I'll show you how that looks like now. If I just press OK and I start counting, 1, 2, 3, 4. Okay, voila. Okay, now you can see it. Okay, so it's just that algorithm execution interval it's what's causing this short delay, and I've done it again for performance purposes. Okay, so back to this. Wrong one. Here we are. Okay, so that's that. Then we have the dashboard. The dashboard is what shows what you can see up here, and the dashboard is simply showing range information. And the setting just below is showing us the location. Where do you want it? Do you want it up here, down here, over here, or up here? Okay, so you can leave that enabled or disabled if you like. I'm just going to enable it, and then we can have a look at it. 2, 3. There it is. Okay, so there's that delay. So what this is doing is it's showing us monthly average range information. So this is the average, and this is the current, which means that we have moved. We are at the monthly range, so we're actually looking to turn around. So if we go to the monthly chart, we have a look. Yeah, that means we're probably going to bleed back because we've reached that level. Okay. And then here we have the weekly. The same information. The average is 331, and we're actually at 330, so that's on the money. So the monthly and the weekly ranges are, we're right at the range. And on the daily we have a 123 and 121. This is quite unique actually, that we have reached the average range on the monthly, the weekly, and the daily chart at the same time. So that's quite interesting. Then we have a little bit of information here regarding this the swap long and the swap short. So if you're selling this asset, you will have to pay minus 2.51 of the base currency per standard lot per day. And if you are, so this is if you're buying swap long positions, and if you're selling swap short, then you have to pay minus 45.45 units of the base currency per day per standard lot. Okay, and this may not be of interest to anyone, but this is just if you're trading big positions. Maybe you're keen on avoiding paying swaps, and you can just pay attention to this information. You can see that it might be a little bit cheaper to sell this asset here. Okay, we'll turn that off. Actually, we'll just leave it on. Then we have alert settings. This is a new setting. This is super cool setting, and the reason I added this setting was because I didn't want a brand new fresh area of supply and demand to be created without me being aware of it. Okay, and so I've set this to true by default, and the beauty of that is once we have an area of supply and demand that's brand new, just been created, and no more than 10 periods have passed since its creation, then we will get a little pop-up box. And you can see here, we have this area here. This is a 4-hour demand. And we have 1, 2, 3, 4, 5, 6, 7, I don't know. We have more than 10 periods there. But if I change this to 20, then I press OK. Note, after the 3-second period, we'll probably get a pop-up box that tells us, yes, we have demand on the Swiss franc, Japanese yen, the 4-hour chart, which we do indeed have, which is right here. Okay, so that's super useful, and it's a really nice feature to be alerted when this stuff forms on the chart, because sometimes you're not in front of your computer or you're working on something else, so it's just a really good idea, especially if you're on the smaller time frames, to be informed when a new fresh area has been created. And the reason I added this is because I did a study about a month ago where I looked at the newly formed areas of supply and demand, and the areas of supply and demand that are tested within 20 periods have an 80% chance of success. So getting at least a one-to-one risk reward on that trade. Okay, and if you reduce that to about 10, the odds go up even more. So it's a really beautiful feature. Okay, then we have this setting here, supply and demand alarm count. This means that each time a new area is created, it will sound the alarm 2 times, as you can see here, once and twice. Okay, and then it'll stop. It won't bother you anymore. And I did this just to prevent a never-ending stream of diddle-oo, you know, that sound that MT4 makes all the time, and I just didn't want that to carry on, so I've just set a cap on that. Okay, so try this out. I think you'll really enjoy it. So it's a really beautiful addition to this piece of software. Okay, and here we have psychological levels. What are psychological levels? Psychological levels are price points that have a psychological significance to many traders. What does that mean? Well, that means that, for example, the British pound American dollar tends to bounce or react at 20 pip intervals and at 50 pip intervals, and most other currency pairs, they seem to bounce at 100 pip intervals and 50 pip intervals. So the big figures like 8100 or 8150. And so this is just a really nice idea to be able to see these. So if I just enable these, I'm just going to enable this and you'll see what I mean. We can go like that. We can zoom in a little bit. See, now you can see these levels here. Okay, so we have, these are 50, so these are big figures, and we had this nice one here which lined up pretty nice with this little area of distribution. Price went up to it and it turned around. You can see we have another one here. Price has a difficult time moving beyond it. It's just a super nice visual way to be informed when we have round numbers, psychologically important numbers. And we'll do that again here on this chart, and you can see a similar kind of thing going on. And the smaller the time frame, the smaller the interval. I think on the 1 hour chart we go down to 20 pip intervals. So here we have a 20 pip round number. We have another one here, and so the space between this level and this level is all 20 pips. Okay. Alright, back to the configuration. So we've got that. We'll just turn that off. And then we have psychological level count. This means that I want to see 5 levels above current price and 5 levels below. We have the psychological line width. This is how thick you want the line to be. But the thickness will not change unless we have a solid line. You cannot take a dashed line and make it and give it a thickness of 2. Only solid lines can have a thickness that is greater than 1. Okay, supply and demand. This is the meat. So enable automated supply and demand. This is always enabled, set to true. And we have the risk to reward ratio. The risk reward ratio simply tells us that when we have an area of supply or demand that's created, we want price to travel 2 times the size of it within this next setting, price imbalance release period, within 1 period. So if I just draw that for you so you can understand what I'm saying, let's say we have this here. This is an area of supply. Okay, this is, let's say 10 pips from here to here. So this is the entry and this is the stop. We want the release bar, which is this one, to travel 2 times the size of that within 1 period. So the candle that breaks away, I want it to travel, I want it to close beyond here within 1 period. If it doesn't do it, then it's not important. Then we don't want to look at it. Then it's not interesting to us. Okay, and I just made today some updates to the core that enabled me to modify these values a little bit. And so now I've changed it to, instead of a 2 and having the price imbalance release period to 3, meaning that we can move 2 times the size of this area of, in this case, supply within 3 periods. I want to see it in 1 period. So we're getting some really beautiful levels as a result of the update I did today on the, the 5th of August 2022. So so this is a really fresh, nice update. Okay, then we have this setting here. This is max accumulation distribution. And this is a very important setting. And the reason it is important is because whenever we see an area of supply and demand, we want price to accumulate or distribute or move sideways, in other words, for no more than 1 period. Okay, so if we look at this area here, it distributed for 1 period. Okay, and the consequence of not doing it, of spending more time like this, like we can see here, or here we spend a lot of time, is that if we had 2 periods, so we had this candle here and this candle here, the result would be that the area of supply would be placed above the area of, in this case, distribution. And this is important because if price spends too much time in an area, then the liquidity, or the once available liquidity in that area is reduced, and we don't want that. We want a lot of liquidity in that area, because this is where we're going to see the big reactions. Price typically, or rather not typically, it always moves easier through thin liquidity, and it slows down and sometimes stops in thicker liquidity. Okay, so if price is sitting in an area for a long period of time, that means the liquidity in that area is going down, and so we want to look beyond that area for an entry. Okay, so if we had a 1 period distribution, entry, stop, Okay, if we have a 2-period distribution, then we want our entry to go where the stop would have been had the price structure only been in that area for 1 period. All right, moving on. Boom. And then we have this greater period multiplier. This is probably one of the coolest features of this software. Some of you may be aware of what this this feature does, but when we set this to 0, the software is going to identify supply and demand on the currently active chart. So the chart that you can see, which in this case is a Swiss franc Japanese yen 1-hour chart. But if we say, okay, I want to see supply and demand on the time frame, one greater than the one we're looking at. So you just press, let me turn this off, you just press this, do this, and now we are going to see supply and demand on the 4-hour chart on this time frame. So if I zoom out a little bit, you can see that we have this 4-hour demand, but we're on the 1-hour chart. Okay, if we zoom out a little bit more, we had another one here. We had this area of 4-hour supply, price went, and we can see the price, the way price reacted on the 1-hour chart. These are 1-hour bars, but we're seeing 4-hour supply. And this is super useful, because what you can do is you can be on the 1-minute chart, you can be watching price as it moves into a 4-hour or a 1-hour or daily supply and demand, and you can just watch how these pin bars start to form. So if you're looking to buy while price is selling, then you can be on the 1-minute chart and you can just wait. You can see the area, you can see based on the color that it's daily demand, so you can just sit and you can wait. So you can wait for the 1-minute chart to slow down, nested within this daily demand. And when this happens, then you can click in at market, or you can place a buy limit wherever you like. Okay, so this is a super beautiful feature. Another cool way to use this setting is to do this. So greater period multipliers. Let's say that I want to see the detail. I want to see where we have supply and demand inside the candles that I have on my chart. Then you can go -1. Okay, so I can go -1, and then something similar will happen. But now we are looking at we're on the hourly chart, but we can see 30-minute supply and demand. Okay, so you can see that right here we had like an area of supply on the 30-minute chart. So it's inside this candle. Price tested it, and then price moved away. And here we have another one where we had a 30-minute area of supply, low in this move, and price came up to it. We accumulated probably another 30 minutes, and then we popped through it. So this is really cool if you're looking to refine your entries based on what I refer to as micro supply and demand. Okay, so let's just put this back to 0, and then we'll go to this one here. Okay, this is telling us a little bit about the thickness of these lines. The line width, this is just set to 2, and then we have this setting here, which is the manual bar count, and this tells the software how many candles to use when performing the analysis. When it's set to 0, it's going to look at the number of bars that you can see on the chart. If it's set to 1,000, it's going to use 1,000 bars to do the analysis. All right. Show consumed supply and demand. So consumed supply and demand is this. This is a consumed supply and demand, and it's simply showing us, as is this. It's simply showing us where we historically have had supply and demand, but now it's been removed. We had supply. It was tested a few times, once, twice. On the 3rd test, it went through it, and so this one is now removed. So the box gets dotted like that. Okay. Tested supply and demand has a dashed border. Untested fresh supply and demand has a solid border. Okay, so dotted line, consumed, dashed, tested, solid, fresh. Okay, and you can see here tested supply and demand, a dashed, consumed supply and demand, dot. Okay, so that's what we just touched on. Here we have trend lines. I like trend lines because they're very nice to see, because they're showing us where we can see the flows moving. So you can and here we have enable manual trendline management, and that means that if you draw a trend line on the chart, we'll do that quickly, the software will grab it. Give it a second, 3 seconds. See, you can see it changed the color of it. So now when I go to the 4-hour chart, I can see that this is why. That means I put it on the 1-hour chart. And so this is just a really nice way to see what time frame these trend lines were drawn on. All right. Continuing on, sorry, my family just got home, a bit noisy there. Enable trendline extension. That simply means that we are taking this trend line and we're extending it into the future, so we're turning it into array. Enable auto trend lines. So that is telling the software to automatically identify trend lines and draw them on the chart for you. Then we have a setting here. This is the minimum. So here we have the minimum swing significance and the maximum. So what it's going to do is going to take these values. Let's have a look at those. And it's going to use those when qualifying these swing points for the trend line. And so when we have, let's see if it finds one here, nothing there. Actually, there was one on the hourly, I think, wasn't there? So it's going to look for, I think, these two here. It's going to look at the swing points, and it wants it to be, each swing point to be respected. So respect for on either side of a swing low or a swing high between 5 and 8 periods. When it finds that, it says, great, here we have a swing point, and then it looks for the next one. Here we have another one. If we have two, then it connects them using a trend line. Okay. All right, good. So that brings us to this, which is a trend line width. Simply tells us how thick this trend line should be, and then we have the style. Here we want it to be a dotted line. Okay, here we have rectangles. Enable rectangle management, and this is a good feature when you're trading manually, and this just tells the software to grab rectangles we draw on the chart, change the color based on the time frame, put the price labels on it and the size of the rectangle, / the position size based on the risk that I have set in the configuration, and based on my account size. Okay, so if you have $1,000 and $1,000 account, and you have a stop that is 58, you have 58 pip size. So we have an entry, we have the stop. Based on the 1% risk, we are allowed to trade 2 micro lots. Okay, so it's just a really nice way to automatically do this calculation for you. All right, moving on. We have rectangles. Okay, so here we have fill the rectangle. That gives it a solid background. I don't like that. And then we have rectangle width, just the border size. Then we have extra capital. Okay, so if you don't want to put your $100,000 in your trading account, then you can put maybe $10,000 in your trading account. The rest of your money, you leave it in the bank, so $90,000, so you can trade for $100,000, but you use leverage instead, so you don't have to put all of the money in your trading account. And then you can say, here we have $90,000. Okay, so if I go like that, risking 1%, so now we are trading, you see, so now for this particular trade with a stop size of 58 pips, we are allowed to trade 206.94 lots, which is a boatload. Okay, so that's pretty cool. And then you use leverage, of course, to so you're borrowing money from your broker essentially. You use leverage to ensure that you have enough liquidity or margin available in your account. Okay, moving on. Trend lines, rectangles, done. Risk, how much you want to risk per trade? 1%. That's fine. And here we have the accumulation distribution. Okay, so what color do you want accumulation distribution candles to be? Well, I want them to be white. What about price imbalance candles? Well, I want those to be lime green. So we go like that. I'll remove this. See, you can see the strong moves away. They're green. The sideways price uncertainty, they are typically colored using the color that you put in the configuration. Okay, and normally you will find a box at the origin of what's one of these green candles. So here we got a green candle, price tested it. Here we had another green candle, another one here, price came to it. Here we have another green candle, price has not yet been there. You can see here we had a green candle, 2, green candle away, tested several times. Okay, so these are really nice as well to see on the price chart. All right, so continuing down, and we have the bar object width, 3, but this stuff is done automatically as far as I remember. So if I zoom in, it thickens the line. If you zoom out, yeah, then it makes the line narrow. So actually, I don't even know if you have to fiddle with that setting, so you can just forget about that. That's not being used so much anymore. And then we have the appearance. This is the colors that we know and love from the software. So we have our monthly colors is purple, weekly is orange, daily, 4-hour, hourly, 30-minute, 15-minute, 5-minute, 1-minute. And we have the default. Okay, and the default is, if there's an error of whatever, then it defaults to this color. Okay, so yeah, that's it. So this is exactly all you need to know to use the software. And so what I recommend that you do is you leave it in its default configuration, and you spend some time just watching it on different assets. Let's go to the Euro American dollar, which I like. You let it load after 3 seconds, and then you can see, okay, where do we have these green candles? Well, we have a lot of green candles moving down from up here, don't we? Going to and then away, to and away, away, to, away, away, away. And so we're probably going to see a reaction up there. You can use these candles as little arrows to point to where we have price sensitivity. If we move to the 4-hour chart, we'll probably see something similar. Okay, where we have this candle moved away. Here you can see that all the candles moving into and then away. So we're going to see a reaction up here. Okay, this is the beginning of a sell zone for this white distribution candle here, so we're probably going to have a reaction there. So just keep your eyes on these and notice how amazingly sensitive these levels are. We had this one here, price came down, tested it, and then we left. We had this one here, price came up to it, and we turned around. We had this one here, tested, went down. This one here, tested, went down. This one here, price came close, and then we moved away. We had this one here, tested, and then moved away. It's unbelievable. It's really, really remarkable how sensitive these levels are. You see, it comes to it. I mean, the price came to this one, to the pip, went away. This one to the pip, went away. You know, now they're removed. We have this one here, price came to it, went away. We had this one, a little poke, move away. This one here, price sat on it. We moved away. Now we distributed on it and then cut through it. This is a very price sensitive area. When price comes here, it's likely going to move away. We had more price sensitivity, departure, test, remove. Another one, price comes up to it and then wriggles through it. This one here, test, departure, untested. This one tested, moved away 2 times. This one has formed several tests. This one has formed a small test and then price tore through it. This one here was tested on departure. This one here, price removed without even looking back. They're not all going to work, but most of them will. We have this one here. Is that one up here? I can't see. I better zoom in a little bit. Yes, we have this one here, which has been tested several times. And so you'll find that these are really, really interesting and very, very powerful levels. Good. Well, I'm going to leave it at that. If you have any questions, let me know. Please post them in the Discord channel or in the comments below this video, and have fun with this. Have fun with this. Remember to focus at the extremes. So if you're on the 1-hour chart, okay, you want to be looking at where price turned around. Price doesn't want to go below here. It doesn't want to go above that. Okay, so you should be buying here. You should be selling here. So use the software to help pinpoint these areas where you should be trading and not be messing around in the middle here. Okay, I'll leave it at that. Thank you so much for watching.